Hello. Our last step in the process of preparing the worksheet and the adjustments is to record the adjusting journal entries in the general ledger. In this video, I'll talk about what accountants have to do to record the adjusting journal entries. The journalizing and posting the adjusting journal entries is step 6 in our 9-step accounting cycle. We previously worked on the worksheet and completed the trial balance, adjustments, adjusted trial balance, and then the income statement and balance sheet sections of the worksheet. In this example, we only had 3 adjustments. One adjustment for supply expenses, one adjustment for prepaid rent, and the third adjustment for depreciation. And we're ready to journalize and post these adjustments shown on the worksheet to the permanent accounting record, the general ledger. Otherwise, our general ledger would not agree with our financial statements. In our prior analysis, we determined supplies expenses have increased by $500 because the supplies were used up and are no longer an asset. Supplies expenses are an expense account and, according to the dealer mnemonic, increase with debits. The supplies account decreased by $500 because only $1,000 of the supplies remain. The supplies account is an asset and assets decrease with credits. So debit supplies expenses and credit supplies account. First, we'll write the header adjusting entries into the description column. And in most companies, there will be a special journal entry type that you use to record the adjusting entries in the accounting software. Why? So that the system knows to put the adjusting journal entries into the adjustments columns of the worksheet. On the next line, we'll start with the first adjusting journal entry. Record that entry in the general journal, enter the date into the date column, and then write the first account supplies expense into the description column and the amount of $500 into the debit column. On the next line, slightly indent and write supplies on the description line and $500 in the credit column. The posting reference column is blank right now, because we have not yet posted the entry into the general ledger accounts. Once we post the entry to the general ledger, we'll write the account number into the posting reference column. In a computerized accounting environment, the accountant uploads the journal entry into the accounting system and submits it for approval. A supervisor will then review, approve, and post the entry electronically. In our example, though, we need to post the entry manually. The process to post adjusting journal entries is the same as for all our other journal entries that we learned about previously. So let's look at the 2 accounts, supplies and supplies expenses, that are listed in our first adjusting journal entry. We'll start with the supplies expense account and write the date 12/31 into the date column, adjusting into the description, the journal page J3 into the posting reference column, and $500 into the debit column. The account has no prior activity because the balance before the entry was blank, and therefore the new balance is $500. That's why we write $500 into the debit column of the balance section for this account. The account we now need is supplies. This account already has activity and a balance of $1,500. Let's write the date 12/31 into the date column of the supplies account, adjusting into the description, the journal entry page J3 into the posting reference column, and $500 into the credit column. We now need to calculate the new balance, which is $1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. 1,000. Once the entry is posted, we update the posting reference column of the journal entry to show the account number of the accounts. The second transaction is for prepaid rent. On November 20th, Eli's Consulting Services paid $8,000 for the December and January rent. As of December 31st, 1 month rent had already been used up. We wrote $4,000 into the debit column for the rent expense account on the worksheet and a credit of $4,000 into the credit column of the prepaid expense account. When we previously analyzed this transaction, we said that we now have more rent expenses. Rent expenses are expenses, and according to the dealer mnemonic, expenses increase with debits. So debit, rent expense. We also have less prepaid rent because the December portion was used up because Eli's Consulting occupied the office space. Prepaid rent is an asset account, and asset accounts decrease with credits. So a credit to prepaid rent. To record that entry in the general journal, we write the date into the date column, rent expense into the description column, and the amount of $4,000 into the debit column. On the next line, we slightly indent and write prepaid rent into the description column and $4,000 into the credit column. For our second journal entry, let's look at the two accounts, rent expense and prepaid rent, that are listed in our journal entry. Let's write the date into the date column and adjusting into the description, a journal entry page number J3 into the posting reference column, and the debit of $4,000 into the debit column. This account has no prior activity, and therefore the new balance is $4,000. The account we now need is prepaid rent. This account already has activity and a balance of $8,000. So write the date into the date column, adjusting into the description, and the journal entry page number J3 into the posting reference column, and the credit of $4,000 into the credit column. We now need to calculate the new balance, which is $4,000. Once the entry is posted, we update the posting reference column of the journal entry to show the account number 520 for rent expense and account number 137 for prepaid rent. The third transaction is for depreciation. We previously calculated that the monthly depreciation is $183 for the company's equipment. To find the debit and credit for this transaction, we analyzed the transaction and said that we have now more depreciation expense, which is an account in the expense category, and expenses increase with debits. That means that we have to debit depreciation expense. The second part of our transaction is that we now have more accumulated depreciation, which is a contra asset account. This is a bit tricky because this account behaves in the opposite way of an asset. Asset accounts increase with debits and decrease with credits. Contra asset accounts increase with credits and decrease with debits. So we credit accumulated depreciation. Record that entry in the general journal. We write the date into the date column, depreciation expense equipment into the description column, and the amount of $183 into the debit column. On the next line, we slightly indent and write accumulated depreciation equipment into the description column and $183 into the credit column. For our third journal entry, let's look at the two accounts, depreciation expense and accumulated depreciation, that are listed in our journal entry. Let's write the date into the date column of the depreciation expense account adjusting into the description column and the journal entry page J3 into the posting reference column and the debit of $183 into the debit column. This account has no prior activity and therefore the new balance is $183. The account we now need is accumulated depreciation. Let's write the date into the date column, adjusting into the description column, the journal entry page J3 into the posting reference column, and $183 into the credit column. This account has no prior activity because the balance before entering this transaction is blank. Therefore, the new balance is $183. What do we have to do next? Once the entry is posted, we update the posting reference column of the journal entry to show the account number 523 for depreciation expense and account number 142 for accumulated depreciation. And we have now completed all the steps involved in preparing adjusting journal entries and the worksheet. I hope this video helped you understand the concept of posting the adjusting journal entries to the general ledger.